Hey traders, TG Watkins here. It is January 5th when I'm recording this Friday morning. I hope everyone's doing well out there. I still got a little bit of a cold that I'm working off, so you'll probably hear it in my voice. But I put out a bit of a poll yesterday because we're getting the pullback in the market that we were finally looking for. It took until the new year because basically I'm assuming big traders, hedge funds, all that kind of stuff, they wanted to defer probably tax or capital gains until 2024. So they basically just held the market up at its highs through the end of the year, and then they finally started selling off, and that's what we're seeing this week. So there was kind of no surprise. I did post about this. In fact, I think, I wonder if I even talked about it. I think I did mention it someplace. There we go. Yep, right here. So talking about this, also the feel-good season for the Santa Claus rally and tax implications. What if big traders and institutions want to defer all these gains and taxes on profits to 2024? That means tickers and the indexes could stay elevated until January 2nd. Boom. And that is exactly what happened. Also, since we're here, remember that we do still have a 30% sale going on. I think this goes until the 18th, maybe the 12th or 18th of January. So if you guys want to keep checking out, new24 is the code. And so, yeah, let's get back to that poll. So we are finally seeing the market pullback, and we have the S&P basically sitting on its daily 21. So I put a question out there. I said, hey, are we going to bounce here at the daily 21 before breaking back below the 21? Or are we going to flag along and then break below the 21? Or, hey, buy the dip. So I thought what was very interesting about this is that both in my Moxie trading room and here on Twitter, we got the same answers. It was literally 50-50 between bounce and flag. Now, I didn't ask the dip question, but I mean 40%, 40%, and 50-50. Wow. Very, very incredible about that. So let's go take a look at that and see what is going on with the SPY. So here you can see we have the S&P sitting just right smack on its daily 21. So for me, because here's also the thing, we have to ask, well, what's the definition of a bounce besides a flag? To me, a bounce is going to be basically something that shoots right back up to the hourly 50, maybe even goes over the hourly 50, but at least up to the hourly 50 from this point. And then a flag would be as if price basically just kind of bumped along here, kind of went sideways, and had the 50 come down to meet price. Okay, so that would be the difference between. And boy, this is looking pretty weak. The market's still super overbought. A lot of things need to come back down. And if we look here, this is one of my favorite things that I like to look at as far as kind of market breadth and conditions. You can see here that the number of stocks over their 20-day SMA was super high. I mean, absolutely pegged to the upside. Same thing with the 50-day, pegged to the upside. And then right about the new year, you can see we actually finally started to get some divergence. And I called this out on a few of my newsletters. You guys can check out profitpilot.com and on YouTube and all that. And then lo and behold, we are really finally starting to see a lot of names pull back. I think all of you are aware of this. You've probably seen it, experienced it yourself. This is what's happening. And I would assume we have further to go. I think that all of this needs to go down a little bit further to continue to blow off some steam and get this market back to some semblance of, buy the lows. Because right now everything is still too high, and I just don't think we can keep pushing to the upside. So we have to let off some steam. Now, this move from November to December was so big that a lot of names are very far from their daily 50s, just like the S&P. I mean, look how far away the S&P is from its daily 50. So I have a feeling that this indicator, I do think it's going to come down, but I don't think it's going to come down quite like this, or at least it's going to take time before that happens because, a lot of names just got up there, and there's going to be a lot of room until price comes down. I mean, you even look at the S&P here, there's going to be a lot of room until price gets below its daily 50, which may or may not even happen. So we don't know. We just need to be prepared for that. So I thought that was interesting stuff to show and to talk about. We can see things like Boeing are starting to pull back again. Makes sense. These things were absolutely wildly overbought. Let's go look at Boeing on the monthly and weekly time frame. And lo and behold, here it is. You can see this is why I'm also saying that we could see these things were super overbought even on the weekly chart. Outside there, off the moving average, way, way up there. So these things need to come back down. This is normal. This is natural. This is what we want to see. We need to see these things come back down. And gotta tell you, there's the Moxie price trigger. Great, great opportunity timing-wise, for the Moxie indicator crossing back below 0, just right there, and that was the time. That was the timing. So the Moxie indicator really does a fantastic job for timing like that, and then we'll just have to see where this wants to come back down. You know, this is a huge move, and it's just overdone, and now we need to see what comes next. So give everything time and patience and room, because that's what they need. You know, there are some names that have gone faster. Now, Apple, I heard they got a downgrade and whatever like that. You know, so be it. But look what it did. It did come back to its daily 50, you know, filled that big old gap. Now, it did go further. That's probably because of the news that kind of helped push it a little bit further. But that's what we got. You got your move, and then here's your pullback. And now we're just going to have to see where it settles into. And then something like Amazon, you know, doing the same thing. Look at that. You can see that there was a huge gap between price and the daily 50, and what's it doing? Pulling back to the daily 50. Now, again, we don't know if it's going to go below the daily 50. It could, but at least the first task that has been accomplished is to the daily 50. So if this goes below the daily 50, well, then you think about a chart like this, and what's going to happen? Well, this graph will start coming down. So we do need names like that to start getting below their daily 50s in order to, you know, bring that indicator back down. So let me just circle back actually to RSP. I forgot to talk about this. This is the equal weight of the S&P, and I just also want to show you guys that, you know, Moxie price trigger right on time. You could even see the negative divergence that was kind of sinking in, and then more specifically right there. Look at all of those red bars, even though price was trying to move up into the end of the year. Again, very overbought. We can see that. So all this stuff needs to come down. We just have to be patient and wait and see where the pullback goes, what path it wants to take, and just be okay with it. You know, there are other names like Chewy that I think we're starting to see these things actually regrow and come back, because what's happening? Newer, higher lows, higher highs. It's in an uptrend. Isn't that nice? And if we look here on the higher time frame, I do think that this is, you know, it's a little bit of a bottom fish, you know, bottom feeding, but we look at this and we say, this could be putting in a bottom right there. And it's got to go through its ebbs and flows and everything else like that. And something like this, I wonder that wherever it finds its low, let's just kind of say around there, just ballpark 20 bucks, could be 19, could be 18, whatever. Let's just say the next move takes it up to there. Isn't that pretty nice? I don't know what that would be, like what, almost 50%? Maybe 40%. You know, that's a pretty sizable move. I think that would be fantastic. And I think that there are going to be opportunities like that for us. Part of the reason I say that is because if we look at the risk-on sector, Mara, I mean, look at this. That is exactly what we are starting to see with these things, you know, higher lows and higher highs, and it's an uptrend. So they have to go through their process, you know, they have to get to the 50, and then they have to kind of pull back to the 50, and then they have to go up again. And again, this is what we're seeing, you know, ebbs and flows. This is pretty normal. Now, us as swing traders, we just have to be able to catch the moves, get out for the pullbacks, catch the moves, get out for the pullbacks, and catch the moves, and get out for the pullbacks. So, yeah, I'm seeing this across the board. I am looking forward to 2024, but the end of 2023 was so stellar that these names have to come back down and just give us opportunities to get back in. You know, some of those, I'm looking at DDOG, same thing. If we look at this, aren't these in, I would say these are in uptrends. You know, they stopped going down, higher lows, higher highs, uptrends. So really, really happy to see this. You can also look at the change in direction of these moving averages on a weekly time frame. Heck, you can even look at the monthly time frame. And don't you see that we have uptrending moving averages? So yeah, I do think that we are in a new bull market. I think these things are working. Of course, we've seen that with the mega cap names. They had been running for 2023, but we are finally starting to get the rest of the market on board. And that's what you can see with the, say, RSP or the QQQE, you know, basically the equal weight indexes. You can see that they are now on board, which tells me that more than just a handful of names are actually carrying this market. But, of course, as I said, November and December was so big that these names need to come back down. And look, you can see even Datadog coming back to its daily 50, just like Amazon, just like Apple, you know, all those things. And if you want to see this, this is what I call an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. So that gave you a very, very clear heads up that you should not be long on this or be prepared for a pullback. So now that this is pulling back, I don't exactly know where they're going to go. We just have to let the market do its thing. But I do think that when they pull back at some point, they're going to start going back up, and that's all we have to do is just figure out where that is. And we'll talk about that over time. If you find this kind of stuff interesting, the way that I show it, talk about it, and if you're interested being able to find these next moves to the upside, come on over. We got that sale going on. Remember, new 24. You can get the Moxie Indicator. You can get the Moxie Trading Room, that we're in, and you guys can come check it out, see what's up, and just come talk to our salespeople over at simplertrading.com. All right, guys. Thanks again, and we'll catch you later. Take care.